Hello, everyone, and welcome to the show. Coming up, we're going to talk about financing your DVC purchase on this week's episode of The DVC Show. The DVC Show is brought to you by DVCstore.com. You'll save thousands of dollars on your next DVC contract when you let the experts at the DVC Store help welcome you home. Visit them online at www.dvcstore.com or call them at 1-800-550-6493. Hello, everyone, and welcome to the show, coming to you from the Bob Varley Studio in Orlando, Florida. I'm your host, Pete Werner, joined at the table this week by my good friend, Sean Falk.
Hi.
Jackie Gailey.
Hi, everybody.
From the DVC Store, Ms. Jamie Carr.
Hey, everybody.
And also Mr. Jerry Saito.
Hello.
Joining us via Skype, our good friend, Mr. Pete Scheidley.
Hi, everybody.
And back on the controls, associate producer Corey Fiascanaro.
Welcome home.
And before we get started, just a couple of plugs here. If you're looking to rent points, maybe you're a little short or you are wanting to try DVC before you buy and kind of see what all the hype is about, your friends over at the DVC Store call. They've got points for rent, 1-800-550-6493 or via their website. But also do yourself a favor. Do not contact them with, yeah, we want to stay at the Grand Floridian next week. No. You need to plan this out. So give them some time. Give them some notice. You want to do these rentals a good 4, 5, 6, 7 months out, at least. Just the same way you would do planning your trip, any Disney vacation. So that, and also if you want to get notified about new contracts that are added to the DVC Store database, easy way to do that, head over to their website, sign up for text alerts. You'll be able to select what resort and use year you want to be notified about, and you can set up as many text alerts as you like, and then every time a contract goes in that matches what you've asked for, you'll receive a text. You're not going to receive text on every single contract unless you sign up for all the resorts and all the use years, but why would you do that? So great tool to get notified right away. So, all right, this week we are going to talk about financing DVC, and this can be a bit of a hot topic on disboards.com and even on social media.
People are so opinionated
they
about it.
really
Oh my
get,
gosh.
and I honestly, the attitude of some people drives me insane.
Me too.
That if you have to finance it, you can't afford it, which is absolute BS.
Yeah.
Absolute BS. That it's a luxury purchase and you should only do it if you can pay cash for it at the time you book, which I vehemently disagree with. I think to make an assumption about somebody's financial choices is ridiculous. To suggest that because for you, buying, all cash, which is, look, if you can do it, great. But for a lot of people, they want to join DVC and they don't, either don't want to do that or can't and want to finance. And it's within their budget and they're not going to be eating ramen noodles for 10 years or not sending their kids to college or anything like that. So I want to talk about what the financing options are. Now, one of the things that a lot of people suggest, and if you can do this, it's a great idea, is a home equity line of credit, a HELOC loan. You usually will get those at a really low rate, probably the lowest rate you're going to find anywhere. And that's a good way to do it. Pete, I think you were going to chime in with something?
Yeah, that's the way I did it. In fact, I've done it twice. The first contract I bought in 2014, we did with a home equity line of credit. And actually, we just paid that off recently, and we just purchased another contract, and we're doing the same thing. We're borrowing from our home equity line of credit. It's about 4% interest, so it's very reasonable. We're doing it over a 5-year finance, and because I agree with what you're saying, I don't see an issue with financing it through, financing this kind of purchase. Yes, it's a luxury purchase, but so is if you buy a luxury car, people don't pay cash for a car.
Right, exactly.
I was just thinking of a car, somebody.
Well, some people will say that the car is not a luxury; it's a necessity.
Well,
It is
Well-
when you're going to get a high-end car compared to getting
Right, exactly.
a car to get. If you're saying you need to get from point A to point B, you can do it on a $1,000 car from 25 years ago. So
that's right. You don't need a $5 or $6.
Technically, if you want to get technical about it, you
FYI,
can.
not riding with Sean anytime soon.
For me, it's like, okay, yeah, living in a home is a necessity too, right? But you could just rent an apartment. So if you can't afford to go buy a house right now, you should just rent an apartment and rent that apartment until you have the $300,000 in the bank to buy that house outright.
Yeah.
It's the same thing. I go on vacation to Disney World every year. It would make sense financially. I'd save money if I had DVC.
And this is one of my points: is that everybody watching, I assume, goes to Disney World. Do you pay cash for that vacation, or does a credit card never leave your wallet? So if you because that's a luxury, plain and simple. Coming to Disney World, no matter how much we love it, is not a necessity. So that's why I find it very, very hypocritical. And I think people in the community, and I'm going to piss some of them off right now, I think it's just about being self-righteous and looking down their nose at other folks. And
I'll use my example, which is I bought 5 years ago at Animal Kingdom Villas, $74 a point at the time. And yes, I financed it. If I had waited until I saved the money, I would just be buying that contract now, and I'd be paying $110 a point.
That's right.
So, yeah, I didn't know that was going to happen. I didn't know it was going to go up that much in those 5 years, but still, it actually worked out really well for me that I bought that contract, and I wish I brought twice as many points back then.
Right.
And financed it all.
So some of the other options that you have, other than doing a HELOC loan, is now if you're buying direct, Disney will finance. They do a hard pull on your credit, and you're going to need a credit score of about 650 or higher to get approved, and which isn't, unreasonable. But the thing is that I believe you have to put either 10 or 20% down, depends on the kind of financing you want, and but the loan itself does not appear on your credit report. The inquiry does, but the loan itself is held by Disney. They do not report it to the credit bureau, so it's not going to, affect your credit in that regard in terms of here's this new $20,000 loan, like it would if you financed a car purchase.
On the other side of that, though, it's still a mortgage. So we get asked all the time if people can sell while they still owe money. So it is still a mortgage. The loan is still tied to that deed. So if you go to sell it and there's a mortgage on it, it's going to have to be paid off before the property. You can sell it with a mortgage active, but it's going to have to be paid off. So you're not going to get a check for the whole $20,000,
Right.
and you pay Disney. Disney's going to get their money first, and
Correct.
then you're going to get the final check. We get that question all the time.
Yeah.
So going direct with Disney, which is what Sean did when he purchased. He financed through Disney with a 20% down, I think
Yeah.
we did. And the interest rate wasn't, I think it's about 9%.
I don't remember.
I believe it was about 9.9%, 9.9, I think is and that seems to be where a lot of the finance companies are in general, which is why a lot of people suggest the HELOC loans, because that loan is going to be, as Pete said, he got his at 4%, which is incredible.
Yeah.
But it's going to be anywhere between 9.9 and 15.9 for a lot of these other companies. I think the biggest finance company for DVC is Monera Financial. Now that is 100% approval. They do not do a credit pull. It just depends on how much you're borrowing and what terms you want. So if you do the loan over, I think it's a 36-month period, and I could be wrong on this, but over a 36-month period, you'll get the 9.9% financing. And the longer the term of the loan, the higher the interest goes. But it's 100% approval. No one is turned down for it. and I believe you do have to put down.
Well, the deposit amount would depend on, again, the terms of the loan. So in some cases, it could be a higher down payment or deposit, or if you're going to do a shorter term loan, I think they want more money down. If it's, or actually, it might be the other way. If it's a longer term, they want more money down. But the deposit is based on the term.
And they have the easiest calculator imaginable on their website, Monera. It's monerafinancial.com. We'll have links for this in the show notes. But they have the easiest calculator in the world. You just select the resort use here, number of points, and
Put in your sale price.
a price per point.
Right,
Yeah, price
right.
per point, and then number of points. It's resort, number of points in the contract, price per point, and then it shows you all the different options. I think there are 3 different options, depending on how long you want to finance for, and it will tell you. You can fill in closing costs and all the other stuff, and it will tell you how much money you need to have at closing for that and what your monthly payment is going to be. It is the easiest thing in the world.
And that's a good point, what you said at closing. So another thing we get all the time is when people say deposit, like you and Jerry were talking about deposit, people automatically assume that we're requiring that in the
Upfront.
normal 7-day time frame for a deposit. We're not. The deposit, whether you pay cash, finance, home loan, doesn't matter what you do. It's 10% of the purchase price or $500, whichever is greater, within 7 days, payable by personal check or credit card. To us, the finance or cash doesn't really matter for the deposit. However, what you need to realize is if you put 10% down and Monera is only lending you 80%, when we get to closing, you're going to need to bring another 10%. So we're not going to require it up front.
Plus closing costs, plus annual dues if applicable.
Correct. So there's going to be, but we're not going to require it up front. That's a question we get all the time because Monera is only going to lend me 80%. Do I need to send you 20% now? No. You can, or you can just hold your money, wait for 5 weeks, and then send it in with everything else. So
Right.
it's the deposit is a deposit. That's not going to matter whether you're financing or paying cash. You'll pay the remainder at closing.
Correct. Yeah, the deposit secures the property, and then at time of closing, there may be a balance left for the financing and the package and the dues and closing costs.
Now, some of the other ones that are available. One that is better on the interest rate is a Lightstream. This is a division of SunTrust Bank, but this is for you have to have like an excellent
Over 800.
an over 800 credit score for them. And so if you have a credit score over 800, Lightstream is a really, really good option because it will give you a more aggressive, I don't think it's as good as a HELOC, but it's a much more aggressive rate.
It's around 6.5.
About 6.5?
6.5, but it's an unsecured loan, so it's like having a credit card debt. They are doing a credit pull. They are reporting to credit. There's no mortgage interest. It cannot be written off on your taxes. So you're purely choosing that because you want the 6 or 6.5 interest rate.
Right, and the term is for 5 years. They don't go farther than 5 years. You can pay it off early, but that's as
Right,
long
where
as they'll go.
Disney will do 10 years, Monera
Monera
will do
10.
years. What about vacation club loans? I know you do a lot with them.
Yeah, Vacation Club loans is great. I do like using them quite a bit. They require I think it's a 600 credit score, and they'll do a 5-year or 7-year, no prepayment penalty. Their rates are at 9.9%, and they're very easy to work with.
And
Great
they have
company.
less fees.
Yeah, less fees. So
So-
at time of closing, your closing costs won't be quite as high as what Monera's closing cost would be.
You'll have the loan origination, so their fees are very close for their fee. Is very close, but they don't charge the additional closing cost fees, and they used to be an unsecured debt as well, but they are now offering
It's
a
a
mortgage
mortgage.
option, and their benefit with them that most people I would say use them for is they finance any size package. So
Right.
25, 30, 40, 50, Monera won't finance smaller point packages. Vacation Club loans is your go-to for the smaller point packages.
And Monera, they won't finance outside of Florida, where
That's correct.
Vacation Club loans will finance any
That's
DVC property.
That's a good point. That Monera only finances properties located in Florida. They will not finance Hilton Head. They will not finance Grand Californian. They will not finance Alani. They only finance here. So Vacation Club loans is another option. They'll finance everybody, correct?
Correct. Yep.
And the small point being the big draw for them. So if you're buying a small point, a lot of people don't ever ask. They think they just can't finance it, but I had someone finance a 30-point boardwalk last week. So they will finance small point listings.
And also something to note is, if you're looking to finance a property, there are closing costs for a loan. So if you're looking at a listing, you're interested in purchasing, there's the purchase price, there's a closing cost, and that's for the package itself, and then there's applicable dues. If you're going to finance, just be aware that these finance companies do have a closing cost, which is additional to the closing cost listed on that property. So,
I think that's when I bought my contract with Disney, I bought, I got them to split my contract up into multiple contracts so that now I know, like, if I ever go to sell it, I'd rather sell small points because I could sell them quicker and for more money rather than having one whole, like, large one. So, but the only drawback of doing that was that I had to pay the closing costs on each, because each one is now a different contract. So now I have essentially multiple contracts with Disney, even though I really just have one. So it is a good option. So now mine would be small point. So like if I needed to go do that, that's an option as well, is like splitting. And then if you're going direct at least, or whatever, you can split and then use whichever financial service you need to at that point.
And something to add that I don't think a lot of people know about Monera, they also refinance. So if you own a DVC property and you need to take equity out for something else, so you need it to buy a car, or your kid's going to college, they will finance an existing owner, whether you bought resale or direct from Disney, they will refi your property. So we've had several customers that have used them for a refi that didn't do anything with our company. So I don't think most people know that's an option.
Yeah. Yeah. So what do you guys, you sell it all the time. What do you feel about I'm assuming you support financing. Obviously it makes the sale easier, right?
Well, I mean, it's kind of like 50-50. It just depends on the client, what their need is, and what they ultimately, the goal for them is. If they do need financing, it's a great option. It definitely can make it affordable, and they can, if they, some people have like a bonus that's coming to them in 6 months, but they really want to get into DVC, so they, they're like, I'll buy this now, and then I'll just pay it off later. So again, it's a great option. I get 50-50 on people that use financing or not use financing. Just depends on them.
And I don't think we always even know whether people, we ask the question, but I think a lot of people do the home equity line, or they've done something with Lightstream and they have the cash wired to them, so we don't know about it. So it's a good option, as Jerry said. Like when both of us started with the company, there wasn't a whole lot of financing, so if people didn't have the cash, there really weren't a lot of options. So it's definitely opened a whole new door of people that are able to come and buy from us, where now that there are options in place.
And my purchase was on a cruise, on an Alaska sailing. So like when I'm there, like I really couldn't be shopping around essentially, because I'm like, I don't have a way to contact different financial places to see like what I did. So I just went direct with Disney, and then I do have the option to just take that to something else, like for a better interest rate, or different loan terms that I might need, and then just pay off Disney and have the loan with something else. But sometimes you are in a spot where you're like, I don't have time, or if you're in Florida on vacation or whatever, like you're not gonna like call around to a bunch of finance places.
Do you know if I know Monera does not finance direct purchases through Disney. Do any of them?
I don't think they do. I don't know. I think Disney has their own in-house financing.
Yeah, Disney won't allow it. I don't think it's an issue of. You could take the loan from Disney, and then if you wanted to go to Monera or Lightstream or someone, get the cash out and then pay Disney off. But I don't think Disney allows any outside vendors to finance their purchases.
Okay. Yeah, I wasn't sure about that.
On the resale end, I don't know if it was mentioned, you don't have to have the financing in place to put in an offer or to put down a deposit, correct?
Correct. Yep. Good point.
You only have to have that financing in place when the closing date arrives, or not the closing date, but when you have to get your papers in and get the full amount in. Correct?
Yeah, that's a great point. If you see a property you want to purchase or you want to make an offer, you don't have to have the financing in line. We ask you to kind of set that up within the first 10 days of your purchase, just so you know what the terms are. It's not going to be a surprise, but it's not required. You can purchase a property without the financing in order. It takes one phone call or an email and you'll be set up. Or, again, within the first 10 days is ideal to get it set up.
Now, is there like a thing where that falls through often, where like somebody really didn't have their financing set up, and then here we are getting close to the closing date. Like, what happens at that point if you've
We set up for that not to happen.
okay?
Yeah, we-
cool.
So we
Yeah.
give you 5 days to apply, 10 days to be approved by contract. I think most of us in the office ask people not to return any signed documents or any deposit until the terms are agreeable. Because once you pass your 10-day rescission on that, if you were to cancel due to financing, like Jerry said, you don't want to find out in the 11th hour that the terms aren't agreeable. Because if you leave the contract at that point, you're forfeiting your deposit. So I would say I can't remember the last time that happened.
Doesn't happen very often.
It doesn't, because
Okay.
we're setting people up. If it does come back because someone didn't follow the guidelines that we gave them, and then unfortunately at that point it would be on them because they didn't follow the guidelines where we would set it up initially.
Okay. So there are some of your options regarding financing. And if you're in the camp of no one should ever finance, that's fine. I don't want to hear it. Okay? Don't bother emailing me about it. Because, no. But there you go. That will do it for this episode of the DVC show. We hope you enjoyed it. And we'll see you again next week. Have a great one, everybody.